Well, hello and welcome, my loyal YouTube subscribers. Thank you so much for being with me this week. Now, the SPY, we've had a couple of very good trades on here recently. We made a 88% return in 4 days when we take into account our stop recently with a SPY call debit spread, looking for the SPY to move higher. And just now, we've closed out in a week for a 39% return as the SPY moved lower. Sean, how did you do that? Well, what we did is we utilized the TRIN. Now, the TRIN, T-R-I-N, is the most accurate overbought, oversold reading in the stock market. It's not the RSI, the relative strength index. That can be overbought or oversold for quite some time, right? What we want to be looking at is the actual TRIN, which is this one here, right? So the TRIN is very, very powerful when you see extreme readings, and it's certainly something that we've just used now to very good effect, making some great returns just in the last 2 weeks, right? Not sometime in the distant past, but in the last 2 weeks. Now, if you get this TRIN reading, which is right here, 0.97 right now. If you get it below, under 0.5, it means you'll have a bearish day for the next 1 to 3 days. And that's exactly how we just made a 39% return in a week, right? By understanding that. But then also, if you get the TRIN where it is severely oversold and the TRIN is over 2.0, you're likely to see over the next 1 to 3 days, 90% of the time, the stock market rally, go higher. And that's how we made an 88% return in 4 days. So understanding these market internals, what's going on behind the scenes, so to speak, and mathematically measuring turning points in the market is very, very important. That's how we made that money just recently. So what do I see happening with the markets right now? Well, we had obviously a move down. This here, this candle, and I'll just get rid of this for a second. This candle here, once below this, we will officially be in a bear market. So let me just put 1 year of data up here. This is 1 year's worth of data. So obviously now with the sell-off, we have taken out all of the last 12 months gains. They're all gone. But this low here that you're seeing right here on the chart, once we close below that, we are in bear territory, okay? Now, what we did is, because a lot of people put their stops under here, right? And also people put ideas to get into trades here. It actually stopped both of them out. Look at this intraday wick. Big move down, took out all those stops, and then closed above that low. What I think will probably happen, again, this is just my theory, is that we could move up to the 21, rally up to the 21, get everyone in, and then turn around and start selling off again. Now, once we get below this low, or probably this low now, then I will certainly get bearish the market. No doubt about that. SPY put options, QQQ put options, all that type of thing, right? VIX calls, whatever you like, but we'll be looking to make money on the way down, right? And hedging existing positions as well. So that's what I'm looking for this week. Now, our 92% accurate opening range, we need to set that now. So now we're on the third Friday of the month that's just occurred on the 20th of May. We're going to set the high and the low of that day. And if we get below 3810 on SPX, we're in bearish opening range mode. We're likely to sell off. And that would also coincide with what I'm seeing here. So if we look at the fib level and we take the low from all the way back in March 2020 before we started to rebound there. If I can just bring it back, there it is there, right? So if we go from that low to the high, we've actually come down to the 38.2. Now, if you look at the video that I sent last week, I showed you that I'm expecting us to sell off and come down to the 38.2, which is pretty much at that 3,800-ish level, okay? Now, if we fail here, we could very easily go down to the 50. Okay, which is around 3,500 odd. Okay, so that's something you need to look at. If we don't bounce from here, I think we're going to bounce, go to the 21 EMA on a daily chart, and then turn around and start selling off more. The path of least resistance is still down, so I do expect more selling in the markets. But that's definitely the levels that I'm looking at, right? That low there, 3,810. 3,810 on the SPX. Take that out. That will then take out the 38.2% fib, and we're likely to go down to the 50% fib very easily, right? So keep a very close eye on that. Bitcoin, not really showing a lot of strength right now. It's still below 30,000. You could say that this is a bear flag, right? We've got the pole and then we've got the flag. This could be a bear flag. If it breaks, could go down to 20,000 pretty easily. So we'll keep an eye on that. Could recover, break above 30 and start moving up, right? Who knows? But that to me looks like a bear flag. Look like it wants to break down out of that and move down to 20. Could very easily be on the cards. Now, this is very much correlated, Bitcoin, very much correlated with the NASDAQ right now. And if we start to see the NASDAQ sell off, then you're going to start to see Bitcoin sell off as well, right? So keep an eye on that, right? Same sort of thing happened, right? A lot of people have their stops below here. You look at this, took out that intraday, and I expect a rebound and then to sell off. That's probably what will happen. Again, who knows? Let's wait and see. The skew, the perceived risk of a market crash, that's neutral right now, so we don't have that. SPX put call ratio is bearish, and the combined put call ratio with a 10-day moving average at $1.12 is actually bullish, right? So we'll keep an eye on this. We'll see what happens, but we will trade what we see and not what we want it to be, and we will wait and see. But yeah, certainly something below 1.75 on the SPX put call ratio, that is bullish, right? So and then the combined put call ratio, let me just make sure I get this right. The combined put call ratio with the 10-day moving average taken into account, okay, something over 1, okay, is bullish, right? So this is bullish. Anything over 1 means there's no one left to sell. It's an insanity point, likely to go higher. However, the SPX is put call ratio is bearish there because it's below 1.75. But again, there are only 2 of 10 that I look at, 10 market internals. But yeah, that's what I think is going to happen. And Bitcoin looks like it's forming a bear flag, wants to break to the downside. So we'll see there. So that's what's happening there with the overall market. The only area or pocket of strength right now that I can see, if we look at the different sectors here, is energy. I can see energy is respecting that 21 EMA, certainly looking very strong. One of the trades that I'm looking at is the USO. Okay, I'm looking at the USO right now. If you wanted to look at something like that, nice trend, respecting the 50 and now above the 21, above the Ichimoku cloud, come down and did retrace back down to the 21 and then bounced higher. I'm looking for it to get above 85. If it does, I've set up a trade with a high return vertical spread that will make me 3 to 1 on my money, 3 times the potential profit as the risk that I'm taking. So we're setting up a trade like that. Myself and my members are setting that up right now. So that's something that we're looking at as well. Another stock that does look strong is Pfizer. Just slowly started to move higher. Looks like in Europe now they've given approval for the Pfizer vaccine for 5 to 11-year-olds. That's probably why you're seeing this bit of a bounce right now. Could move higher here, just one to keep an eye on. So that's what's going on there. Now, they're my views on where the market is likely to go. There are a couple of trades that you could look at to make money: Pfizer, USO, the energy sector in general, but they're 2 areas that I'm looking to make money with. Keep an eye on the market. If you see it, if you just want to look at the SPY, if you do see it take out this low here, just be ready for the markets to continue to sell off and sell off quite hard. So there'll be a lot of people that will be triggered if we get below that 380 sort of level. If we close below that, we're going to start to see some pretty heavy selling. So just be aware of that and be prepared for it. All right, my friends, hope you found that useful. I will talk to you again next week. But remember, we do have the Federal Reserve speaking this week. Their meeting notes are going to be dissected. We've got inflation data coming in. We're going to keep an eye on that as well. Did get some positive results there with retail moving up in April, although you wouldn't know it looking at the chart. We were down 1.42% on Friday, but really the Federal Reserve meeting notes is going to be something big, and also the core inflation data. So we'll keep an eye on that. That certainly market will be keying off that. All right, guys, for right now, the path of least resistance is to the downside, so we will see what happens. Our job is to be in tune with what the market is telling us and to trade in whatever direction the market tells us. The market's in control, not us. We need to be flexible, accept the risk of the trade, and be ready to change our approach at any time. All right, my friends, talk to you again next week. All the best, and bye for now.